Okay, good morning. Good morning. June 25th, 2021. It's 8:33 a.m. This is Ryan Sweeney here with the pre-market action. And boy, do we got a beautiful one lined up. I honestly wish I could have done this video a little later because I wanted to see how this 8:30 economic data played out a little more. But we've got a little bit of a digestion here. I got to go out to breakfast with somebody, and don't worry, it's just my parents. And I also, just as a precursor, might have to either put off my post-market video and not do one, or I'll do it pretty early because I also have some commitments later. Hey, I'm sorry. When I get a little older and a little more calmed down, I'll probably do less, skip less of these things because I'll be more boring. But right now, life's pretty active. But anyways, so we got 3 points of economic data. We got personal spending, personal income, and PCE core inflation. And just as a start, PCE core inflation is the primary mechanism or the primary data point that the Federal Reserve likes to follow. So it is one of the more anticipated data point releases, but the CPI, I would say, let's just do a tier list here. I would say the number one is probably the CPI and the PCE core. I mean, they're both pretty important to the market, but the PPI is definitely lower than that. They all affect the market, but probably the PCE core is the most important. So a big miss in either direction would be not a good thing. But in terms of the market, we got a very good number, and I think this is why you're seeing stocks gaining across the board right now off of this number. They were flat, but now the S&P's up by 0.2, Nasdaq up 0.2, Dow up 0.4. Okay, and gold and silver up 1.2%, gold up almost a percent, about $13, 0.75, and oil has gone slightly positive off of this news. So what happened? They expected a 0.6 rise. This is May PCE core, and they got a 0.5% rise. So we still put on a huge gain. If you annualize that, obviously it's 6% per year, which is massive inflation. And this is the way they measure it, which is highly, manipulative in terms of what it's telling you. But the thing here is, the reason that I think the market likes numbers, because if it was really hot, which is like what we've had in the previous inflation numbers, CPI and PPI, then there would be pressure on the Federal Reserve to, again, push up interest rates because this inflation is so hot. Now, if it also came in super low, that would be, well, just an acknowledgement that inflation isn't coming in as hot as we thought, and then you might see pressure on metals or even pressure on stocks, because the stock market wants to know that inflation is here and is being created. It's a confirmation of the mechanism that drives the stock market higher, which is debt, period, end of story. Okay, so we got the 0.5, which is just below expectations, but still a substantial rise, and I think that was a very comfortable number for this market, and so hence you're seeing stocks rise, and gold and silver put on gains. So that was the first one. We got personal spending. They were expecting a 0.4% increase, so they're expecting more demand for goods, people going out and buying more things. Well, we got 0%. And what other data points have I been talking about? How about import prices? How about trade deficit? All of these are rising so fast, but yet we're seeing personal spending not rise at all. So this is more evidence of inflation in the economy in multiple sectors across the board globally as well, which is big, very big. And personal income dropped 2%, which is just terrible. I mean, all these are just terrible. I mean, we had no increase in spending, we had a dropping of personal incomes, and we had inflation up. This is stagflation, people. There's no way around it. At least right now, according to even the official numbers. Again, this is all in context, and you say this is what they're allowing us to know. It's way worse than this, in my opinion. But they were expecting a 2.5% drop in personal income, so I guess it's not as bad as they expected. So you should be happy that your personal income is dropping only 2%. But yeah, not really looking too good for the economy, but looking beautiful for the market, and we'll see how this gets digested throughout the day, and we'll see if gold and silver hold on. I think they should hold on to their gains, right? There's 6% inflation a year, a terrible economy. You'd think their risk-off assets and commodities would be doing well in this environment. And a lot of commodities have been doing quite well, but recently they've definitely dropped a little bit. But anyways, I think that's enough. We'll get more news throughout the day, and we'll see. We got Loretta Mester speaking, Cleveland Fed president, and we got Eric Rosen again, and we got New York Fed John Williams, who's a very important guy, speaking at 3 p.m. So some market movers there. We get consumer sentiment at 10. So all these are things to watch for. And if I don't get back to you, I will let you know on Twitter. For the post market, and just watch these things, people. All right, that's about it. I'll see you later. I'll let you know what's going on. Thanks for being with me. All right.